Hi guys, it's Sasha. If you've watched my channel before, you probably know that I'm quite heavily invested in the semiconductor space. There are a lot of reasons for that, but today I wanted to talk about one company in the space that I'm particularly excited by, and that company is AMD. In this video, I'm going to share my views on AMD, talk you through their numbers, and show you my valuation model and my target price. But just before I go any further, I have to make a disclaimer. I am not a financial advisor. I can't provide financial advice to you, and if you do need financial advice, please make sure you go and seek the help of a suitably qualified professional. This is just my personal opinion and it should be taken as such. This is just purely for information and educational purposes. So just in case anyone wants the answer and doesn't care why, the target price for AMD that I have set at the moment is $125, which some people might think is on the high side, and it is about 50% higher than the current price at which it's trading as I'm recording this video, which is about $83. And I'm going to walk you through exactly why that price is what it is, and I'm going to explain exactly my reasoning for it. So if you're interested in that, stay tuned. Now, AMD is a company that manufactures computer chips, and specifically they operate in two core areas: processors and graphics processing units. AMD is traditionally known as a manufacturer for consumers, and today 61% of their business is still in that consumer space. But the super exciting part is the enterprise part, and I'm going to get to that bit in just a second. But while we're on the consumer side, AMD is currently dominating the processor manufacturing space. Their processor technology at the moment is years ahead of their one big rival, which is Intel, and that is the only real serious competitor they have. On the graphics side, Radeon, which is an AMD product, have been rapidly catching up with Nvidia over the last couple of years to a point where they are currently close but still behind on the performance with their 6000 series units that they launched in Q4 last year, and the rate at which they've been closing the gap to Nvidia suggests that they might get a whole lot closer or even on par with them as early as potentially this year, in December this year, but maybe in 2022. The innovation from the processor side of the business is definitely appearing to be spearheading this growth in a phenomenal way. The consumer side of the business is growing at a rate of 46% in Q1 of this year versus the same quarter in 2020, and this rate of growth has been pretty consistent. The entire business has posted a 45% growth in their annual results for 2020 compared to 2019. Now, a 45% rate of growth is pretty incredible, and the amazing thing is I expect this rate to sustain, if not actually accelerate, over the next few years. We have a huge growth in processor-intensive work, and distributed workforce industries from media to communications to design and architecture are requiring top-end processing power, which these guys are supplying as a dominant provider. And then you have the rate at which developing countries are adopting these technologies, adding these industries, adding these processes, these workflows, and this is only adding to the demand pressure. But anyway, the 45% rate of growth for the consumer business is not even the most exciting part of AMD. On the enterprise side, AMD is really beginning to accelerate at an unbelievable rate. Their revenue for this side of the business in 2019 was $465 million out of a total revenue of $2.13 billion, so about 22%. That revenue increased from $465 million to $1.35 billion. That's a 286% rate of growth, and the enterprise side of the business is now contributing over 39% of the total revenue. But the crazy part is that this segment seems to be actually growing a lot more in 2021, numbers that we haven't seen yet. In March 2021, AMD announced their AMD EPYC 7003 series CPUs for the enterprise segment, and they are not messing about. Tests from across the board are showing performance levels of at least 2 times that of the closest competitor at the top, and even more of an upside for mid-range units. We're talking a margin of years in terms of development between them and everybody else. And while we're on the development side, AMD is spending a huge amount of money to push themselves even further. They spend a record $610 million in just Q1 of this year on R&D. That's 38% of their gross profit. That is a really large amount of money. And the results of that development effort are really beginning to show. This year, AMD is being integrated into all the leading cloud computing solutions in a big way away for the first time Amazon AWS, Google Cloud, and Microsoft Azure. I've seen these come through myself because I run websites and I frequently manage servers, and those instances are offering more processing power at a lower cost. So I think the numbers from this segment will be really, really interesting to watch over the next few years. And while we're talking about numbers, in the Q1 release that they published a few weeks back, AMD said that they're expecting 2021 to finish 50% up in total over 2020, which I think is actually conservative. Now, in Q4 2020, that growth figure for 2021 was only 37%. Only 37%. I know, it's crazy. But it increased from 37% to 50% in just one quarter. And here is why I think the number will end up even higher than that. The AMD semi-custom unit is growing at an insane rate. This is a part of their enterprise half of the business, where instead of providing the same fixed products that are sort of plug and play into the cloud server farms, they manufacture custom chips. If you're wondering who they're selling these custom chips to, the latest Microsoft Xbox Series X and the PlayStation 5 both run on AMD processors. The new Tesla Model S and Model X cars that are just launched are also both powered by a custom powerful AMD processor that should be able to support full self-driving when that's released. And behind the scenes, there are dozens of other applications and other companies that are not as publicly known too. The rest of the enterprise segment is going to continue to accelerate while AMD is offering ridiculous levels of performance at really good prices. At the moment, AMD is still restricted on the speed at which they can supply their components, which is restricting the level of growth to the, relatively modest figures that I just mentioned. Like everybody else in the industry, the global chip shortage is affecting them. Although, as you can see from the numbers that I'm showing you here, the truth is there is no chip shortage. There is just a huge spike in demand. The outcome the same, but the reason is entirely different. And a spike in demand is definitely much, much better for businesses like AMD than a chip shortage. So AMD is saying that they expect 50% growth in 2021 versus 2020, which would result in about $14.6 billion in revenue. But if I take their $6.14 billion revenue that they earned in the 2020 consumer business side and grow it by 45%, that is growing at the moment, then I get $8.9 billion. And if I then take the $3.6 billion from the commercial side from 2020 and grow it by just 120% because of everything I told you, I get $16.8 billion in revenue, which is a lot of upside. And I'm growing the commercial side at a fraction of what is actually currently growing at the moment. So if I go with those numbers, I get a 2021 EBITDA of just under $3.5 billion. And I then reduce the rate of growth down year on year to about 32% in 5 years' time to be conservative. Yes, it does sound crazy. It does sound insane when I'm saying conservative about numbers where yearly growth rates are somewhere in the 40% region, but that is literally what we're looking at. And that is way below what they're running at the moment. Is it doable? Well, I have revenues of $22 billion for AMD in 2026. That's in 5 years' time. And that is for a company that is currently wiping the floor with their competition in terms of their product, and that is sitting years, literally years ahead in terms of development. And that competition has just posted revenues of $77.9 billion in 2020 with an EBITDA of $37.9 billion. So if I'm honest, there is plenty of space to grow even without the market expanding. But the rate at which the market is exploding, I actually think I might be a bit conservative here. I know the word conservative does not sound right in this context, but you know what I mean. So I've gone and scaled the assumptions for depreciation and amortization, working capital flow, and capital expenditure relative to the revenue. And I've assumed a tax rate of 21% flat here. It looks like Joe Biden is actually giving up on his plans of a 28% corporation tax rate increase. And I'm not convinced that even if he did go back to it, that he would be able to pass. So I've stuck with that current rate of 21% for now. I've then used a discount rate of 10%. I know there's going to be somebody out there who disagrees because this is a high growth tech business and it should be higher because inflation might go up, but it's also a mature company. It is a market leader that only has $300 million worth of debt and $1.7 billion in actual literal physical cash. So that number works perfectly fine for me. Remember, these are just my numbers. I don't know the future, and and these numbers are probably going to be very wrong. So if you want to go and invest in AMD yourself or not invest in AMD, do your own research, run your own numbers. I'm just sharing my opinion. Don't listen to chumps on YouTube. Make sure you do your own homework. So anyway, I've set a 5% rate of growth for the long-term calculation. Some might say that's racy because often people set it a bit lower than that, but it seems wrong to go lower than that given the rate of growth that I'm seeing all the way to 2026 in this exact same model. So on the EBITDA multiple, I set a super conservative 12 times multiplier. And I think in 5 years' time, for a business that is going through the rate of growth that they're going, that is probably at least a factor of 2 out from what it would actually be. But let's not get too carried away and let's be conservative, because if there's a bigger upside, I'm only going to be more happy. So based on these numbers, a quick calculation gives me a target price of $121 using the perpetual growth model, or $151 using the terminal value multiplier. Now I prefer to stay closer to the first one and it's more conservative, so I'm placing a rough $125 price target for AMD, which unbelievably, I actually think is conservative. That means I have an upside of about 50%. And that's why I'm investing quite heavily into AMD at the moment in my portfolio on Stake. By the way, if you want to go and try Stake out, I actually really like the app and I'm using it more and more. Go and use my link in the description below and you'll get a free share worth at least $11.30 for depositing £50, which is not bad at all. If you enjoyed this video and want to see more like it, please go and hit that like button for the YouTube algorithm. Thank you so much for watching. I really, really appreciate it. And as always, I'll see you guys later.